they don't know you. So I'll give a brief intro. Ben is one of my go-to attorneys, and he and I work together on a variety of different cases, from estate planning to tax planning and just about everything in between. So I'll let Ben introduce himself a little bit.
Sure. So I'm my phone chooses just that second to ring. I'm an attorney here in Cincinnati. I am a sole practitioner out on the east side of town in Anderson Township. So my practice is primarily dealing with small business owners frequently on tax issues, either to structure themselves to avoid tax problems, or more often than not, to dig out of tax problems once they find themselves there. So Mike's a great feed because he always gives people tax problems that causes need to fix it. But no, he and I work together on quite a number of cases going on for the past couple of years, and I'm glad to be on the webinar here to see what we can figure out about municipal taxes and recent changes.
There you go. Well, this is an ongoing conversation, and thanks for joining us. This is the Thriving Agent webinar series for September. It's the last Wednesday of the month at 1 o'clock. And the idea is to provide a forum primarily for real estate agents, where I open up with a topic. It might last 10 or 15 minutes. It might last the whole hour. But the idea is to open with a topic and turn it over to real estate agents then to be able to pose their questions and have a forum for someone reasonably competent to hopefully answer them. So one of us hopefully can fit that bill. The topic that came up last month, maybe even the month before that, was municipal taxation of real estate agents. And I spoke about this issue in November of 2016. And the agents that I spoke to, was a group of 100 agents, they had never come across this. No one had ever brought it up that they might have a filing responsibility in the cities in which they sell real estate. And the specific code section that I brought up was the Ohio Revised Code 718.02, specifically Section F, Paragraph 1, and that talks about the situs of real estate sales. I'm going to open that up and bring it into. Hopefully, I can bring it into our screen share here. And essentially, it says that a real estate agent or broker is going to be taxed, in my opinion, on the commission earned if a sale occurs in a municipality. Specifically, it says the real estate is situs to the municipality in which the real estate is located. It kind of makes sense, right? So that's my take on it, is that real estate agents probably have a filing responsibility to the various municipalities in which they do business, or at least in which they have closed a transaction. Can you expand on that a little bit?
Sure. Yeah, if the wording is awkward, and that's seems to be a requirement with tax statutes. If you look at, Section F creates a two-prong scenario. So F1 begins except as provided in F2. So assuming F2 doesn't apply, but you have to kind of look there first. So F2 applies to agents who are residents of a municipal corporation, residents of a city. So F1's dealing with unless you're a resident of a city. So that's kind of the first big divide there. So if you are a resident of a city, F1 doesn't apply. So F1's looking at, you live in a township, you live in a village, you live somewhere that does not have a municipal income tax. You with me so far?
Absolutely. Now I would say that F2, it applies to an individual living in a municipality. What they're saying is that the person living in the municipality will get a credit for taxes paid based on F1.
Well, and so F1 then goes on to say, unless F2 applies. So assuming F2 doesn't apply, then commissions that the real estate agent makes shall be situs to the municipal corporation in which the real estate's located. So if F2 applies, the F1 part about being situs to the municipality where the real estate's located, and situs in this context is really just meaning, I think you're absolutely right. Where is this taxable, if it's taxable anywhere? So unless F2 applies, and we can dive in there, F1 puts this thing where the real estate's located. So what becomes kind of awkward then is moving on to F2, unless the individual, in this case, the real estate agent, is a resident of a municipal corporation, so of a city where there's an income tax. If that's the case, this becomes easy. The person files, the real estate agent files the income tax return in the municipality where they live. They're required to do that anyway. If they've paid tax elsewhere, that's a credit, but F1's where things get kind of confusing.
I agree with that. Yeah, if you live in a municipality, your W-2 wages are taxed by that municipality unless you're having withholding to another city or you pay tax to another city. Or if you have business income in the city in which you live, that's taxable to the city in which you live. That's what F2 is saying. Mm-hmm. If you have a business in the city of Montgomery, but it does some amount of business in the city of Blue Ash, and you file a return with the city of Blue Ash and pay tax to the city of Blue Ash, the city of Montgomery, your resident city, will give you credit to some extent, in most cases in Ohio, to the extent you pay tax to the other city. Now, there are exceptions to that, but that's the general rule.
And so I'm completely with you on that. I'm not positive that F2, by its own terms, requires the filing in other municipalities.
I agree. I don't think it does. F2 does not. F1, I think, is where that is going to come into play.
Right. So when we're talking about credits under F2 to other municipalities, that could be for other income, for spousal income, for other wages. So yeah, F1's where it gets weird. So the ratio. The ratio part makes sense. So you look at all real estate sales anywhere from any municipality. You're going to take the percentage allocable to that particular city where the real estate was sold from. Where it gets confusing is now if you have a one-time sale in a municipality where you don't otherwise do business, you potentially here now have a reporting requirement. That's all well and good. It's relatively simple form, except that once you get into the system, the concern is now they're going to expect a return the next year. I mean, how from a compliance perspective, do you end up preempting what's going to be a delinquency check the following year when you don't file a following year's tax return? Right.
That's what I had started to say before I realized that we were having technical difficulties. This example here is a real estate agent that's doing business in multiple cities. Is not a resident of any particular city in this case. So the example is that they're generating $216,500 in commissions throughout the year. That generally would be reported to them on a 1099 from the broker. They're going to have some amount of business expenses and some amount of net income. Okay. The idea here is to show how that was it gets broken down. They had $75,000 in sales in township areas. That might be Green Township, it might be Sycamore Township, but in otherwise unincorporated areas. And then they have sales in various municipalities throughout the state. In this case, went all over the place. And based on F1, the net income is allocated to that city in proportion to that city's revenue to the total revenue. So in Montgomery's case, it would be $30,000 as compared to the $216,500. That's 13.86% against the net income. It means that $12,000 is taxable to the city of Montgomery at Montgomery's 1% rate. They have a tax liability of $120. Now, there's a couple of things there, in my opinion, that come into play. One, as Ben alluded to, one is the municipal code requires 90% of the tax liability to be paid in by January 15th. So you may already have a late payment penalty due to not following the estimated tax requirements. So you almost have to track this throughout the year and catch it as you make a sale in a municipality and remit something. You're not going to know what your net income is yet, but to remit something to get it into their system if you're going to have a filing responsibility. The other is, and that's part of why we're having this conversation, is did selling that a or several pieces of property in a municipality trigger a filing requirement? And I think it does, and that's why I have Ben here to argue with me, if you will, to determine, to kind of flesh this out. I had tried to get a couple of tax administrators on the webinar and did not get cooperation. I was willing to do a phone interview, but essentially the response I got was a link to the tax code, which was very generous and helpful. So this particular spreadsheet kind of breaks down, in this case, the possibility of what it might look like for a real estate agent. Multiple cities, multiple filing responsibilities, a total tax of $850. I'm guessing anywhere from $25 to $50 in preparation costs per city. So this agent would incur an additional $270 in fees, roughly, for a total additional cost that maybe they're not expecting of an additional $1,100. Ben?
No, I agree that's an unresolved question as far as I know. There is active litigation over the entire scope of these changes. A lot of these were part of Senate Bill 5, radically changed the municipal tax code a couple years ago, and a lot of that's still wrapped up in litigation. A lot of it is, the main fight is over, can the state really step in and restrict a municipality's ability to tax to the extent that it did. So far, the cities aren't making much progress on that. In the meantime, though, I'm not aware of any city that's been aggressive enough to start really going after non-residents for these filing issues. A wrinkle to throw in here, though, is a major change to the way these taxes have been administrated historically, is that now, for the first time, it started this past January. So this will happen. The window opens up again in January, and I think you have to elect by March. You may know that off the top of your head, Mike.
March 15th. Better than
I do. March 15th. So the idea is, in the past, a corporation, pick whatever store you want to picture in your head, had to file anywhere that it had a location in Ohio. So a store may have a dozen, may have 50 more municipal tax returns to file. The state, for the first time, is allowing those companies to opt in and file those returns through the Ohio Business Gateway, whereas in the past they had to be filed through each municipality. Some allowed e-filing, some just didn't. The way that applies here, though, is if you do have multiple filing requirements, you could potentially opt in through the gateway to file all of those at least in one place. You still, though, have to give notice to the individual cities that you've made that election, and that doesn't necessarily get you out of the problem we're talking about here. It just consolidates it, I suppose.
Right, and the screen that I just put up is the Ohio Revised Code on electing to file with the administrator for each of your cities, or for all of your cities. It's 71880, and this code section allows you to opt in. It's not required, but this may be ultimately what real estate agents or anyone doing business in multiple jurisdictions opts to do. Now, in previous conversations, Ben mentioned that if this option is selected, that it dramatically limits the city's ability to follow up. Essentially the filing with the probably the Ohio Business Gateway kind of preempts the city administrator from having much ability to contact you. Can you elaborate on that, Ben?
Well, sure. And so what this has done is it's shifted administration to the state. So depending on your municipality, that could increase or decrease your odds of something bad happening here. But the idea is now your city tax return, if you take this election, has been filed through the gateway. It's been filed through the state. So now if that city return is selected for an audit, it's going to be the Ohio Department of Taxation conducting the audit, not the city of wherever you would otherwise have filed. Depending on the municipal resources, that could be good or bad. The cities are charged a fee from the state for this opportunity, and that's part of the litigation. Is now the state has sort of horned its way into what would otherwise be a city's right to govern its own affairs. We haven't seen how that's shaken out yet. There are literally 0 published court cases on these issues. So none of this has worked its way through the system yet. The gateway option just kicked in this year, so there just hasn't been enough time to see how this has shook out yet. Nobody really wants to be the first one to have that opportunity, but it's still very much the Wild West until this thing settles. That doesn't really solve the question of whether you have to file. It just arguably makes it easier if you have multiple municipalities in which to do it. Now you're filling out the form once instead of we've simplified Mike's spreadsheet a little bit.
Well, you need the spreadsheet to do the online filing.
Well, exactly. So you're still doing the work.
Right. But yeah, it would certainly be easier than filing 5, 10, 15 paper documents with each municipality with a copy of your federal tax return, whether it's a sole proprietor or a corporation. So it may simplify that process. As Ben said, there's no bright line that indicates whether you should make this election or not make this election, or whether you have actually incurred a filing responsibility.
Right.
And that's going to be a conversation you need to have with your tax professional. In my reading of that particular code, it would seem that if they're saying that the sale is situs to a municipality, that's tying that agent or broker to that municipality for that transaction, which would seem to indicate you've created a filing responsibility for yourself. That's something that's
certainly the safest read.
Well, yeah, it's definitely the safest route. Yeah, absolutely. And it complicates things. Once you file with a municipality, even if you mark the return final, they're going to keep you on their tax rolls for a period of time. I think it's 2 to 3 years. So you're going to continue to get a filing letter, request for filing from the municipality. Now, I don't know if that is going to play through if they elect to file through the commissioner or not.
Well, yeah. So if they file through the gateway, the municipalities are told from the state who filed, so they still have access to those those taxpayers. And if the election, there's no one who ever has to take this election. I mean, it's entirely optional. It's a convenience of the states.
At least for now.
For now, anyway. Right. At least with municipal taxes. So it's a conversation you'll have to have with the tax preparer. You'll have to have on an annual basis with the tax preparer. I think what Mike's getting at is you don't want to be overly generous on. You never want to file something you didn't have to. Obviously, not only to avoid paying tax you didn't otherwise have to pay. They're less likely to tell you that you should file something you should not have filed, but they'll very definitely tell you if you didn't file what they were expecting. And the fear here, and I fully believe that's legitimate concern, is that municipalities aren't going to know how to handle this. There's going to be false positives on delinquent taxpayers. You filed this year, you didn't file next year. Did that mean you just didn't file a return? Are you evading your responsibilities there? There are going to be some bumps in the road with this.
Yeah, and in my experience, the cities can be overly aggressive, or at least seemingly over aggressive. I've heard stories of, for example, Reading issuing bench warrants because somebody didn't file a tax return. It's the issue with the municipalities is they are where you are. Obviously the state is as well, but their agents and their representatives have a more difficult time in reaching out and touching you. Whereas if you live in Reading, they know right where to go.
Right. I completely agree with that. I've had clients that owe, into seven figures on federal income tax, and they're fine. They shouldn't be. Please don't walk away from this saying the attorney said it was fine to owe $1 million in income tax. That's definitely not the advice here. But we've had clients have warrants issued for the $800 city tax bill. I mean, it's just there aren't the inefficiencies that block the system with the IRS.
Right. Yeah, it's unfortunate. One of the questions I received last month was, how do we fix it? Well, short of municipal mergers, merging Montgomery with Blue Ash and Sharonville and Norwood and all the other cities, or some combination of that, where we just simply reduce the number of taxi municipalities, I don't know that you're ever going to completely get rid of this. And the likelihood of some sort of mergers between cities is extremely remote.
Right. Yeah, I think that's virtually impossible.
The politics just don't work.
Right. At some point, though, and it may take several years for that to happen, someone's going to win the lottery here and be the one chosen to be audited for this. This will work its way through the courts at some point.
Yeah.
The problem, though, is when that ruling comes down, we were supposed to have all known that for the past few years.
Right.
So the safe bet, keep filing. I mean, file everywhere. That's not what I would recommend. But what are you telling?
It's up to the client. In some respects, we're at the client's direction as far as where we file. Obviously, we're going to file federal, we're going to file state, we're going to file a municipal return if they live in a municipality. So all bets are off. If you live in a taxing municipality, you're going to file a return, or they're going to come visit in one way or another. This whole issue comes up in the cities, or for the cities in which you don't live. If you're living in Montgomery and doing business in Blue Ash, and you sell a property in Blue Ash, have you created a filing responsibility? Possibly. Right. If you don't file in Blue Ash, you're still going to pay tax on it in Montgomery because that's where you live. The issue would be at some point down the road, Blue Ash may send you a letter saying, hey, we think you owe us some money, and you file a return with Blue Ash. Then you would have to turn around and file another return with Montgomery to ask for credit for the tax paid to Blue Ash. Right. And there's a statute of limitations on all those sorts of things. So one or two cities isn't such a big deal, but because of the way our geography is laid out here, an agent could visit 5-10 municipalities in a day. Sure. So it's entirely possible you may touch a filing responsibility throughout your year in 4, 5, 10 different municipalities. And I just want you to be aware of that potential responsibility and talk to your tax professional about it. I have one agent who files in every municipality they touch. It's been, I think the most has been about 7. I have other agents who I know are selling in double-digit municipalities just because of the amount of commission generated. But they don't file in those municipalities. They happen to live in a township, so they have no municipal filing requirement for their where they live, their residency. So it's a broad spectrum of what are the ramifications, who's supposed to file, all those sorts of things. And again, these webinars are not meant to give specific tax advice to anybody, but to broach the topic, make sure you have an idea of questions that you should be asking your tax professional, whether it's me or not, or Ben for that matter, so that you can make informed choices. I'm not saying that I want you to file in 15 different municipalities. I want you to pay the least amount of tax allowed by law, but the law may say you're supposed to file. So that's a conversation you need to have, and at least be aware of the consequences of not filing. If you don't file and you were supposed to, and you're contacted at a later date, not only do you owe the tax, but interest on the tax, a late filing penalty, which is a minimum $25 per municipality, and possibly a late estimated tax penalty.
Right.
So it's, you have to weigh those costs and which bite is worse.
Well, and by all means, though, don't limit business. Don't avoid.
Right.
Don't let the tax issue or tax complication drive operations here. I mean,
Right.
get the sale, make the sale. We'll figure out the tax.
Absolutely. Yeah. Don't let the tax tail wag the dog.
Absolutely.
Yeah. Make the dollar first. I had somebody talking about overtime, and overtime, because it bumps them into a different withholding bracket. They don't see the full benefit of the overtime hours. So they wanted to quit working overtime. And I said, well, you don't want to give up the 60% that you get to keep to avoid the 40% that you have to give to Uncle Sam. So you're still getting the bulk of the benefit. It's just, there are requirements that you have to follow to be able to hang on to as much as you can. Yeah. And we want to keep you in balance.
Oh, so this is an issue that's changing. This is going to be, the advice is going to be different in 6 months. It's going to be different in a year. At some point, this is going to settle. And by then, the legislature will change the rules on us, and we'll do this again.
A request for questions. I know one of the agents that's on here right now he said he wouldn't vote for me, Ben. I suggested that if I was potentially a tax administrator in a city, that I would be looking for signs, real estate agent signs, and he said he would not vote for me. And I'm not.
Well, yeah, don't put that in the yard signs. That's a bad thing.
Right. I'm not looking for to increase the tax cost for real estate agents. I want to help you save money. I'm not going to become a tax administrator. So, anything else we should touch on this, Ben? I don't want to keep bringing this up, but it's been an issue for 2 calls now, I think.
Sure.
If agents need a copy of this spreadsheet, please send me an email, and it has both non-resident and resident calculations on it. You just drop in the cities in which you do business, and it can do a calculation. At least you can see what the potential damage or responsibility might be, whether you actually file in all those cities or not. And you may say, I'll file in the top 3, the ones I would owe the most to, or something like that. Yeah, I mean, at some point we're going to get guidance on this gray area is going to become clearer. Right. I don't know if I'd say just pick the top 3, but there is thankfully for the first time a cutoff that if you owe $10 or less, you don't have to file in that city. So there you go. There you go. My agent says he's still not going to vote for me.
It'd be a waste of tax coach shirts.
Right, there you go.
What else are you going to do with those?
Right. He says, so do you suggest we just keep a log of communities we visit and do business in? Ben, I'll let you before I comment.
Absolutely, because we're still talking about net profit. So if there are opportunities to reduce that, all the better. So you're being taxed as though you're a business here with a net. If there isn't a net, or there's less of a net, the catch here is going to be making sure you allocate the expenses just as aggressively as they're allocating the income. So absolutely keep a log. Track everything you possibly can. Yeah, then dump it on your tax preparer and make them sort it out.
I don't think we're going to have Ben back. I would say what I would suggest you do. Yes, keep track of the cities you visit, but probably more importantly is keep a list of the cities in which you sell a property, because that seems to be what this calculation is going to be based off of. So if you are repeatedly selling properties in Montgomery, you have a total of the commissions that you earned in Montgomery or Blue Ash or Sharonville, whatever municipality it is. The importance of keeping track of how often you visit a city might come into play if you are an employee of an S corporation for withholding purposes. But I would almost say that that's less important because the S corporation is going to pay tax in the city that you live in, if you will, because that's probably where the S corp is based out of. But ultimately, it may pay tax on the net income that it earns in another municipality, just as you would as a sole proprietor. So the 20-day rule may come into play if you're an employee of your S corporation, but I would be more concerned about where you're selling the property than just visiting a location.
Well, I'd be even more aggressive there on the expense side. So if you're living in a city, then fine, that the numbers are going to shake out. If you're not, though, so if you are the township, the unincorporated village resident, then don't just keep track of where you've sold property, where you've visited. Keep track of where you've advertised. Keep track of allocate those out too.
Well, I think those are general business expenses. You're going to incur those anyway. The way I'm looking at this calculation, though, is it's based off of the percentage of revenue generated in a municipality applied against the total net income. So the expenses are going to boil down into the net income anyway, regardless of where they were incurred. So you could incur expenses for marketing in Norwood, but maybe you don't have any sales in Norwood. But that Norwood marketing cost still affects the net income that gets applied to Montgomery. So the expense side of it gets baked in. Now we want to make sure that you record all the expenses that you incur and pay for. That's the key to that, I think.
Well, and so it's still part of the same tax planning equation, though. So we're still piggybacking off of the decisions you make at the federal level, but absolutely keep track of the details.
Yeah,
we don't know how the court's going to shake out on this.
That's true. Many of us don't advertise in one community. Most advertising is online. Yeah, and that's what I'm saying. Yeah. Most agents aren't targeting or spending a lot of dollars specifically to a specific neighborhood. It's more of a general advertising cost or meals and entertainment. Entertainment's not deductible anymore. And some would say meals are not either. That's an argument for another day. We have another question. It's always better to have the details and not need them than need them and not have. That's a great point. It doesn't hurt to keep track of where you've traveled inside the city. So if you know you're going to be in Montgomery, make a tick mark on Montgomery, and that way, if the 20-day rule ever came into play, you could show my calendar says I was only there 12. It's easier to do that on as you're going throughout the year rather than make it up 2 years later when you get audited. If you get audited.
Right. And that's with or without this. That's best practice anyway with mileage logs.
Yeah, absolutely. And if you're using a tool like MileIQ, some of that information's in there. You may be able to tag particular drives to a municipality. I'd have to look at the app to confirm that, but you might be able to then filter those at a later date if you needed to. Yeah. So again, it's part of the general business expenses, having a log of where you went for mileage, indicating why you were there. That's all federal purpose information that you could substantiate what municipality issues you may encounter. Yeah, very good. Any other questions out there? Business entity question: should I be an LLC? We'll briefly touch on that. I'll give the CPA example answer. The doing business as a real estate agent inside of an LLC does not do anything for you tax-wise. And I know that there's a common recurring idea that if you form an LLC, it's for tax purposes. But I assure you, it's not. Forming an LLC, and have an attorney on our call here, so I can say this. Forming an LLC, it essentially puts a barrier up between you and predators, and it's a porous barrier. It's like a chain link fence. If a predator wants in, and you've not kept your house in order, they're going to get in. And beyond that, the LLC does set a foundation on which you can build for tax purposes. And there are some elections you can make that, under the right circumstances, may be able to save you tax dollars. But I'll let Ben talk about LLCs for a moment.
Sure. So to explain my bias here, 99% of the businesses we form end up being LLCs. For some of the reasons Mike alluded to, it's flexible from a tax perspective. It's not going to do anything for you at first, and for tax purposes, and that's fine. But it does open up the opportunity as income raises to specifically to change the way that the entity is being taxed. Having said that, taxes aren't the only reason to do it. It is inexpensive enough. There's really no reason not to. It's a liability shield if you do it right, and there's no reason not to do it. It's a cheap insurance policy. Ohio has a fantastic LLC statute. States kind of compete amongst themselves for which state can do a better job at this. We kind of colloquially know that big corporations tend to be headquartered in Delaware for that same purpose on the corporate law side. Ohio, though, if you live in Ohio, is a fantastic statute. It protects from creditors in a way. It gives more protection to an LLC member than a corporation would give to a shareholder in most circumstances. And it's far less expensive. Once you set it up, it's set up. There's no recurring fees. So
the administration of it's much easier as well.
Far easier. You can, there's a level of flexibility. That's something you should absolutely look into.
Ben and I did a webinar a couple of years ago on the Secretary of State approved my articles. Now what? And it's an older video. It's probably one of our first attempts to convey some information, and it's still out there on my YouTube channel. Yeah, we might want to revisit that. If you ever listened to Dave Ramsey, Dave is pretty adamant about not forming an LLC until your business is profitable, until you're really making money. And I think he's giving short-sighted advice. Put a barrier up between you and whomever may want to do you harm as best you can. So the LLC is an inexpensive way of doing that, and it doesn't complicate your business life. It doesn't cause you to have to keep various records or, it really is a very simple strategy to slow a predator down. It is only effective as you make it, though. You need to keep your house in order and make sure you are separating your business life from your personal life. So I always say, if you don't treat it as a separate entity, as standalone from you, then why would you expect a court to? So it's important to have good books and records to document the business purpose for an expenditure. Don't run your groceries through your business checkbook. Keep those lives as separate as you can.
Well, and that's good advice, with or without the LLC. I mean, ideally, you're doing that as a sole proprietor anyway. The difference, though, the LLC now has a level of protection. So if there is a judgment against you, if you lose a lawsuit, if something happens, one of the L's, both of the L's, limited in liability. The whole idea is to protect your personal assets in a way you couldn't otherwise.
Right. So very good.
Yeah.
Absolutely. Ben has worked with several of my clients to set up LLCs. If you have questions, he's the go-to guy. And if you need his contact information, his website is kramerlegal.com. It's Ben Cramer. His paralegal is Christina Ponath, and there'd be great resources for you. And hopefully we can have Ben back on the Thriving Agent webinar in the near future. I don't see any other questions, and we're coming up on the hour. Ben, is there anything else that you wanted to add?
There's not. Thanks for having me, and I'd still vote for you.
Well, I appreciate that. I didn't tell you what office I'm running for, though. Doesn't matter.
I'm on board.
Very good. I appreciate it. If you hang on for a second, and I appreciate everybody that tuned in. If you have any questions for next month, drop me an email at mike@financialclaritygroup.com, and we will attempt to cover your question as best we can. And if there's anything that comes up between now and then, let me know. 513-488-1121. Look forward to seeing you next month on the Thriving Agent webinar. Take care.